All right. So, hi everybody, and welcome back to Quest for Alpha. For those of you that are new here, I'm an engineer. Like most of you, I have a full-time job. I trade on the side because it's genuinely a passion of mine. I enjoy looking for opportunities in the market, mainly through technical analysis, although sometimes I do want to understand the broader markets. I'm curious about the fundamentals from time to time, but most of my decisions are really driven by what I see on the charts. The main reason why I started this channel is to document my approach and keep myself accountable in public. If along the way you can take something useful from it, then even better. It's a bonus. My approach to trading is intentionally simple. I rely on two main filters. As I mentioned, I have a full-time job, so I don't really have too much time to spend on the charts. I just do it in the free time that I have, and I need to do it very quickly, and I need to try to be as efficient as I can. So I rely on two filters. The first filter is the direction. I want to make sure we are in an uptrend on a higher time frame. In this case, it's the monthly time frame. I'm not interested in fighting the market or predicting bottoms. So the second filter is structure. So I do look for a stock to pull back to a clear demand zone. And then once that happens, I'm looking for a confirmation. That confirmation generally happens on a lower time frame. And in my case, it's on the daily time chart. That's it. There is really no indicator overload. The only indicators I use are the three EMAs that help me determine whether something is in an uptrend or not. And like I do every weekend, I will do that today as well. We'll go through some of the trades, talk about how they performed over the past week, what I'm watching going into next week. And then I'll briefly show you the Excel spreadsheet, something that I use to track the portfolio to see how things are progressing so far. So let us start with Dover. Dover actually reached our target of 2-to-1 this week, which is great. So this was actually a very nice play. It's a nice consolidation here, broke out from that consolidation, and then we enter the trade. CTVA. So this is nice. It's continuing to rise and getting towards our target. So far, so good. CPay had come down on Tuesday. The markets this week were a little volatile, especially on Tuesday, and this was because of some of the statements that President Trump made, and then they bounced off based on his speech in Davos. IR, Ingersoll Rand, so you can see that Ingersoll Rand actually did pretty well. I had moved, it seems, the risk to reward. It hasn't reached our target just yet, but it is doing pretty well. It's on the path. True TransUnion, this one is still in the negative. It hasn't really done anything for a couple of weeks now. We are going to continue to follow it. Aris Management, that one actually dropped down. This is unfortunate. It is where it is right now. I haven't exited the trade. Remember, I focus on using flexible stop losses. So this is only one candle that had broke below my set stop loss. So for the time being, I'm going to take a look at what's going to happen in the next week. It may bounce off immediately. It may continue to come down. It may just consolidate for a few days. So this is something I'll be looking at in the next few days to manage it a little closer. Now, these next two trades, these are not something I invested. I just called them out last week for examples. Let's see how they're doing. TDG had dropped a little bit, still in profit. And TDY actually did very well. I mean, it even spiked above the 2-to-1 profit, and it's somewhere over here. From some of the trades that had in the previous few weeks reached the first target, there were two of those, Prudential and APO. We are going to take a look at it, that actually are positions that I have closed because they have come back to our break-even point. So Prudential, you can see there was a major drop here. Tuesday, I didn't want to trade. I was trying to monitor what was going to happen on a Wednesday, and on a Wednesday, it actually came a little bit closer to the break even, and that was really a sign to exit the trade. Waters Corporation, just consolidating somewhere around the 221. Sorry, our initial target. Merck also consolidated in the last few weeks. Regeneron, probably at the same place where it was last week. VRTX. So VRTX was an interesting one on a Tuesday. It actually dropped, hit the stop loss, but it closed above, and then it had bounced off. So I haven't really exited this trade. I'm still in it. ALSN, again, consolidation. APO, this is a trade that I exited at this place here on a Friday. And FCNCA, that had a significant drop, but still not close enough to the break-even point. Now, few trades that I'm looking at for short-term trade setups for next week. Let's take a look at those. Those are a little bit more interesting. So BJ's is one of these trades. This to me is forming a consolidation. It's not something I would enter just yet. I'm hoping that there's going to be maybe a few more candles here and then a candle that will break out the consolidation. If the candle breaks above it, then I'll have to monitor and see how I feel about entering it. For the time being, this is a setup that may or may not be executed next week. RMD, you can see this is a nice consolidation, but we are waiting for a candle to break out and close above it. Chipotle is forming here. This would be a very nice play, and it's a nice play because you can see how much it had pulled back all the way down to the demand zone. So there is a lot more opportunity for this stock to go somewhere higher. That will give it almost like a 50% gain 70% gain to just get to the previous high. Netflix, this is still early on. Netflix had pulled back also a lot. It is reacting. It appears to be reacting a little bit here in this demand zone, but we're not there yet. Confirmation hasn't really been set just yet. Novo Nordisk, I recorded a little short. Now, this is an interesting one. You see, it had closed above, but this was barely closing above the 200 EMA. This to me is a nice consolidation. The thing is that if this was a bullish candle and had closed up here, that would have been a clear entry for me. In this case, this still pretty much remains to be inside the consolidation. So I'm going to watch and see what is going to happen in the next few days. If we have a nice bullish candle closing above here, that could be a reason to get in. And finally, Lin. So Lin, this is a really nice one. This is what we have. This for me is an entry on Monday. As long as it doesn't dip below, if I see the price just reaches right above it, this will be a good entry. Now that's really it. That's kind of a summary of what I'm looking at for next week and what had transpired over the previous week. Now, what I'd like to do is, like I do every week, is to go and open up the Excel spreadsheet and take a look at how the portfolio is managing. Okay, so let's now take a look at the Excel spreadsheet that highlights the active portfolio. We have 3 tables. The first table shows the account balance week over week. It just gives a high-level view of how the portfolio is evolving over time. And you can see that week over week, it's doing pretty well. It's showing a profitable balance, and it is pretty similar to what we had last week. If we go to the second table, this one actually shows you the realized profit and loss. It assumes a more conservative approach. So if a target has been reached of 2-to-1, then we take 50% off of the position and we let the rest ride and we manage it from there. In this case, we are only sitting at a minus 1.8. However, if we decide we want to cash in today, we would have a 6.5 risk to reward. And this is since November timeframe. And then the third table, this is also similar to the second one. It shows the profit and loss. It assumes a fully mechanical approach. So if we reach a 2-to-1, then we take our profits, full profits at 100%, and we do not let the trade to continue to run. And this one is doing also pretty good. If we cash in, then we are sitting at like 5.8 or so risk to reward, which is great. Okay, so with that, I mean, this is not about perfection. It's really about consistency. It's about process, and it's about learning over time. And that's really what my intent is here. I have found profitability with this strategy, and I'm very happy that I came across this method, and I'd like to continue to do it. There is obviously going to be certain nuggets that can be identified from collecting a lot of these results, and over time I may end up tweaking it and adding perhaps another table, another way to manage the positions and the executions. If this kind of approach resonates with you, which is slow, it's structured, and it's really realistic for someone with a full-time job, then feel free to check out the channel and browse the other videos and stick around. All right. Until next week then. Have a great day.